Hello, everybody. It's Randy Selzer here. Welcome back to the podcast and to my YouTube channel. Today, once again, we have our very special regular guest, Denise Pisani, who is a well-known mortgage broker here in Mississauga. And welcome, Denise. How are you?
I'm very good. Thank you very much. How are you doing, Randy?
I'm doing great. Thanks. Denise
Awesome.
she's connected with a company called Mortgage in the City, which is powered by the franchise Get a Better Mortgage. A couple of well-known companies here in the city of Mississauga. So welcome back, Denise. You've been a regular guest, and it's great to see you again.
Thank you. Thank you. Happy to be here.
So what do you want to talk about today? We had tossed a few ideas around. One of the big things that comes up with a lot of people who are looking for a mortgage is their credit rating. The credit rating, of course, is something that every bank, every lender is going to look at before they advance a mortgage loan. And credit ratings, and I'm going to let you do most of the explaining here because you're definitely the expert on this, but they have a score. They have a thing called a beacon score, which is a number, and I believe it runs from 300 at the very low end to about 800 at the top end. And everybody has a different beacon score, a different score that the banks look at, they must look at before they do a loan. Some people have a terrible score, and some of the most serious things that could happen is, for example, a personal bankruptcy. If you go bankrupt, chances are your credit is going to be pretty bad for a considerable time. But a lot of other people, their credit is basically okay, but they may have some small blemishes on it. Maybe they missed a credit card payment here, or maybe they were late on a car payment there, that sort of thing. And that can affect your ability to get a mortgage loan. Is that correct?
Yes, it can. Exactly. So basically, a credit score lets us know and lets lenders know how this person or individual makes their payments and how responsible they are in making payments.
Right.
So, of course, missing a payment, doubling up the next month, missing 1 month and doubling up the next month doesn't make up for missing the payment that you made.
Right.
So making your payments on time when it's due or before the due date is very, very important, because they don't want to have to run after people for payments, especially mortgage payments. So definitely that score and your credit, your overall credit history does play a big role in when determining whether someone wants to lend you money. So very important.
So let's say someone, let's talk about first-time buyers, because they are very often the most highly impacted by this. Let's say someone comes to you and they say, look, we're saving our money. We want to buy a condo 1 year from now. 1 year from now, we want to buy a condo. We know there's a couple issues in our, we were young, we were a little bit irresponsible. We had some minor problems with our credit, nothing major, but we missed a few payments here and there. Maybe, there's some things that or maybe due to COVID, I was laid off for a while. I couldn't make my car payment. There was some stuff that happened. And you look at them up and you find that that their credit it's not perfect. It's not terrible, but it's somewhere in the middle. What can people do to improve that? Let's say they've got a year to work on it. They're not going to buy anything for a year. But they say, Denise,
good timing.
What can we do?
1 year is good. Yep.
Yeah. What can we do to try to fix this a little bit so that when the time comes when we need that mortgage loan, what can we do to make it more likely that the bank is going to give us the loan?
Right. So there's some key things that you can do to help increase the score. Okay. Obviously, make your payments on time. That's the big one. So if your payment is due on the 15th, make sure you make that payment, even if it's just the minimum payment of $50.
Right.
Make the minimum payment, because if you don't, and it goes into a 30-day cycle where you don't make the payment.
Right.
It'll report as 1 month late, and it'll bring your score down. You're looking at between 10 to 20 points that you'll lose from that overall score by just missing that $50 payment.
Amazing.
So very important. Another thing would be a way to increase your score, that beacon score, is to make sure your 30% mark of your balance, for your limit on your credit card. If you get close to owing what the credit card limit is, so if your limit's $5,000 and you owe $4,950,
right,
your score actually comes down.
Even though you've made payments on time, but because
you made payments,
you're jacked up to the top, and your credit card is pretty much full. That's
right.
bad.
you will lose points
Ah,
because basically you're not making you're living off your credit card, and
right.
it's a way of letting showing the lender
Hmm.
that you're living beyond your means if your
Could
credit
be,
cards are right at the limit.
could be some risk here.
So
So,
it brings your score down. So
okay.
the secret is be within 30% of the balance or of the limit. Sorry.
Okay. So if you're to keep the math simple for me, I need to keep it
So
simple.
$5,000 limit. When I told you were at 49.50,
Yeah.
you should try to keep it at 1,500 at
Okay.
least.
Okay. So
1,500.
that's the maximum on your card, which would be 30% of
Right,
the,
exactly. Yeah.
right.
Like if you start to go above that and it
Right.
reports monthly, then you'll start losing points.
Okay. That's very interesting.
That's
And that,
another
that would be for Visa, MasterCard, any credit card where you
all
can
credit
carry
cards.
those.
Yeah.
Yeah. Okay.
Another thing would be is if you've got a really old credit card that's been around for 20 years, don't close that card out.
Ah,
Don't ever close that card out. The longer the history, the higher your credit is.
oh, that makes sense.
Yeah,
You know what?
so-
I didn't know that, but that makes perfect
so
sense.
try to leave those old credit cards.
Right.
Don't close out those old credit cards. Just leave them on there. If you don't use it anymore, just leave it on there.
Okay.
Yeah.
Okay. That's a
Try
good one.
try not to apply for lots of credit cards. Like, you pass by Walmart and they're like, hey, get a free Walmart and free Walmart Visa and you get 10% off.
Right.
Don't be applying for all those credit cards. Canadian Tire will give you 10% off your first purchase. All those types of cards. If you're someone that keeps applying for credit cards, your score will come down every time you apply for a credit card and a credit check is done.
Okay.
It just shows that you're seeking credit.
Right.
So of course your score will come down. So if you've got 20 credit cards, your score will come down. So just all you need is one or two. Like you should have about 3 cards, 2 to 3 cards maximum. You don't really need any more than that, right? So a Visa, MasterCard,
Amex, maybe
American Express.
Yeah. Okay. Okay, go on. Sorry.
Which brings me to number of inquiries. So again, when you keep applying, when I do a mortgage, a lot of my clients are very scared because they hear this, that don't apply for a lot of debt because your score comes down. I don't pull credit checks as soon as someone tells me they want to apply for a mortgage. The credit check is one of the last things that I do before they actually start going out and looking for a home. Because, if the numbers don't work or their income isn't satisfactory to what we can use to apply for a mortgage, I'm not going to pull a credit check and waste a credit check on them and bring their score down. If everything checks out, their income, their job, their down payment, their numbers look good, and they can go out and shop for a house for 800,000 and they're ready to start looking, Randy, they call you and say, Randy, we're ready to go. Denise pre-approved me. Then I pull their credit just to make sure. Obviously, they forgot to tell me about a bankruptcy that happened 3 years ago. We need
Minor
to know
detail.
before Randy starts taking them out to look at 50 homes, right? And then we find out afterwards. But yes, don't be so easy and letting everyone pull their credit, and don't apply for tons and tons of credit cards because your score will come down. So that's something to keep in mind as well.
Makes sense. Okay, so and maybe I'll just back up a little bit in case anyone listening to this today. You are able to check your credit online. There's a website, for example, called Equifax. Equifax
Exactly.
is .ca, I think.
Yes,
and you can go on.
Equifax.ca.
Yep, and you can go on there and type in your personal information, and you can. I believe it's still free if they mail it to you, but if you want an instant answer, you have to give me.
Yeah, you know what? I've got to actually look into that. Because I've heard it was free, but then someone told me they had to pay $25. So I'm not quite sure.
That's what I
But even
heard.
if it is $25. Everybody should pull their credit once a year on their own. You never know. There could be something fraudulent happening on your card that,
Or a
maybe
mistake.
applied or a mistake.
Yeah.
And you don't want to be caught trying to fix a mistake at the same time you're putting an offer in on a home. You should put it in your calendar to try to check your credit bureau once a year, maybe on your birthday. That'll trigger something, or just the beginning of the year. Just try to pull your credit, review it. Make sure everything on there is yours, belongs to you.
Right.
If your credit score is down, then let's try to figure out some ways to increase it.
Right.
So just things like that for sure.
Okay.
Very good. Very important.
Okay. So some great tips there. Don't apply for every credit card of Canadian Tire, Walmart. You don't need those. Don't do it, because that shows the banks that you're a little bit hungry for credit. Maybe you're short of cash. They don't like that. Make sure that you make your payments on time. Do not go over a 15% maximum on your credit limit.
30%.
I'm sorry, 30. Oh, see,
30%.
okay,
Yeah.
so 30%. So yeah, if your card limit is 1,000, to keep it simple, do not go over 300.
Try not to. Yeah,
right,
people do.
Yes.
But obviously, if you do go over, maybe try to pay. Listen, credit cards should be paid off monthly. They're temporary. Temporary means of cash, quick cash that you're going to pay off at the end of the month.
Totally agree.
It's hard for a lot of people to do that. Obviously, I've done it before. It's very hard. We're all
guilty.
Yeah, we're all guilty. Yeah. But the idea of a credit card is to try to use it and pay it off at the end of the month. But obviously, if you get close to that limit, just try to focus on chipping away at it to bring it under at least 50%, 40% till you get to that magic number for sure.
Makes sense. Now, I heard from someone once that there's a very nifty strategy that a person can use if they have some minor bruising on their credit, because the banks are very much interested in your ability to repay a loan, no matter what kind of loan it is. And I'm aware of a strategy where even if you have the money, a lot of people have RSPs, and right now it's RSP season. Where they're saying, well, I'm going to put some money in an RSP this year. Every year we try to put in a couple of thousand or a minimum, whatever, into RSP. But the strategy is, even if you have the money, especially if you have the money and you're trying to improve your credit, you go into your bank branch where you're banking, and instead of paying for that RSP with your own cash, which you already have, you actually ask for an RSP loan. You ask the bank to loan you that money, and keep it in a term deposit, in a deposit within the branch. And I've been told, and I hope I'm right on this, is that because the bank is holding that RSP in the branch, that they don't even do a credit check for it, that they will issue you that loan. Then after you get your RSP, by using this RSP loan, it can even be for a small amount, a couple $1,000s. Then once you've got it, then you walk into the bank 2 weeks later with the cash that you had all along, and you pay off that RSP loan early, and the bank loves you because they say, well, we did a loan for this person. They paid it back early, and all of a sudden your credibility with the bank goes up. Now, that's a while ago. Does that still exist?
It's still, yeah, it does. But sometimes paying it off isn't the key thing, because then you're not showing your credit, how your repayment is.
Okay.
So I do recommend to clients that do have credit that's not like poor credit,
right?
And they'll say to me, well, no one's approving a credit card for me. How am I supposed to rebuild my credit?
Right.
That is what I tell them to do. I tell them to go to the bank, get an RSP loan, but they do a credit check, Randy.
Oh, they do.
They
never used to. Years ago, you could get away.
As soon as bank systems are set up so that as soon as someone applies for a loan, it automatically generates a credit bureau.
Okay.
But because even if someone's got poor credit, because the bank is holding the RSP as collateral, and if they don't make the payments back, they just cash the RSP.
The bank can't lose. Right.
Yeah. So it's a good way of rebuilding your credit.
Okay. Credit
up. And there's another way too to build your credit up.
Okay.
When clients tell me, no one wants to give me a credit card, Denise, how am I supposed to rebuild my credit? It is frustrating for some people. Another way to do it, but you've got to understand the bank's point of view and the credit card companies. If you've been lent money and you didn't pay them back,
it's understandable.
I want to lend you money.
Right.
So another way of where you can build your credit up with poor credit is a prepaid credit card.
Okay.
TD Bank does it. Capital One does it. And I'm sure a couple other banks do it, but it's called a prepaid Visa or MasterCard. So what it is what it is. So you give the bank $1,000 cash.
Right.
So you're saying bye-bye to your cash.
Right.
Because the bank is going to hold it. And in turn, they're going to give you a Visa against that $1,000. So if you ever stop making payments on that Visa, they've got the $1,000 to save them, to back it up. But that doesn't give the client authority to don't miss payments just because the bank's got $1,000, because that's going to affect your credit. So you're using this way, you're using this great system to improve your credit. So don't be missing credit, your payments on that small credit card for $1,000, because it'll report on your credit as a missed payment, and then you're not doing yourself any justice. Right.
Understand. So you're loaning, well, you're giving the bank your own money, and then you're basically borrowing it back.
Exactly.
On that credit card.
It's a secured credit card.
Right.
And it's a way to build your credit.
Right. By showing that, hey, I can make these regular payments. I can manage the balance. Okay. You're showing to the bank that you're responsible and that you can be trusted with that.
Exactly.
Okay, good. That's a good one too.
Yeah, it's very good.
Denise. Okay. So excellent. So there's a couple of strategies we can use, and then going back again to just, don't get too many credit cards. Don't do too many inquiries. We talk about the Equifax. Once a year is plenty. You don't have to check it once a month, believe me. And what are some of the other things we can talk about?
Don't get too close to the limit. Did we say that?
Right. Exactly.
Don't apply for every credit card under the sun.
Right.
Make your minimum payments.
Right.
And you only need 2 to 3 cards.
Absolutely.
Exactly.
And I learned that the hard way. When I was a young person, I had a whole bunch of credit cards, and they can get out of control, even if your balances are not so bad on each individual card. If you have 7 of them, by the time you add it all up and they're all charging you interest, not a good plan. And I totally agree with you. To pay those at 19% interest or 20% interest, you don't need that in today's environment when the rates for everything else are like 2%. Why should you want to pay 20% on a credit card? Absolutely.
Yeah, exactly.
This may be a little bit off topic, but another thing that's come up with some of my clients who have purchased a house, this is after they got approved and they've got a closing coming up in 60 days. Something that people may or may not be aware of. It's not a good idea after they've got their loan commitment and their house is closing. Right now it's March and it's closing at the end of May. It's not a good idea to go out and buy a new car between now and the closing date, or take on a large debt between the closing date of your real estate purchase.
Of course, yeah.
Because, and a lot of people are not aware of this, that the banks will recheck you before they advance the funds. Is that correct?
It's not always, but they can do random checks.
Right. So they say, wait a minute, you just bought a $30,000 Ford truck. Why did you do that 2 weeks before closing?
Right.
And that's so that just
if you've purchased a home, don't buy any large ticket items. Don't borrow any more money, not until the closing date. After the closing date, do what you want.
Great
Before
advice.
the closing date, don't change jobs.
Yes.
That's another topic.
Right. Another topic for another time.
Jobs, don't borrow any more money. Exactly. You want to wait till the closing date. The bank approved you based on the information that we provided on the approval date. If any of that changes before the closing, they can renege on the mortgage.
It can happen. Yes, it can. Yeah. Okay. Well, that's all good. I don't know if we want to get into serious stuff. There's if someone goes bankrupt, that's something that stays with you for 7 years. That most people.
7 years. So just one thing I'd like to add on that. If you file bankruptcy or a proposal, the difference between a bankruptcy is you don't have to pay any of it back.
Right.
It's written off.
Right.
Okay. So you basically walk away from your debt and say, I don't want to pay this. I'm filing bankruptcy. It's on your credit for 7 years.
Right.
You need to rebuild your credit from scratch after 7 years. You'll have a very hard time borrowing money. It's going to be a very tough path to build up on again. If you file a proposal, a proposal is when financial, I can't remember what they're called.
Like a settlement.
Yeah, basically, they'll negotiate with the creditors to bring it down the amount. So say you owe $5,000 on your visa. The bankruptcy solvency, what they'll do is the company will negotiate with the creditors to bring it from $5,000 to $3,000.
Right.
And then once they negotiate all of your debt, so say you initially owed $50,000, they could have brought it down to $30,000. And then you pay it back in a loan for $30,000. You pay the $30,000 back over 5 years. Let me tell you, it's the same thing as a bankruptcy. The banks treat it the same as a bankruptcy. Even though you've paid it off, it's still treated in the eyes of the bank when you're borrowing money as a bankruptcy.
Right.
So again, 7 years from the date of the payout that you've paid them out.
Wow.
Yeah,
So
that's another topic as well, Randy.
We'll talk
there.
about, okay, we'll talk
Yeah.
about that another time. That's hopefully we won't see too many of those, although I'll tell you, the timeline that we're on in the world right now, there's so much stuff. I mean, we started with COVID, okay. And, you know, we had the truckers in Ottawa. We had all the political instability in the US, and now we've got Russia invading the Ukraine. I mean, there's so much stuff going on. It's stressful.
Yeah, it's
it really
crazy
is
right now.
It really is.
Crazy.
Everybody I speak to is kind of stressed out, but real estate keeps trucking along. I don't know how they do it. People just love their real estate. I think the market may have slowed a little bit just in the last while.
It did a little bit. Yeah, I've seen
Yeah.
a little bit of a slowdown for sure.
I'm still bullish, though. I am. I think that overall, you still see there's this big imbalance between supply and demand. There's still way more demand than there is supply. Even if they increase rates a little more, which I think they will, you probably would agree this year that rates could creep up a little more.
Yeah, a little more for sure.
I think we're still pretty strong going forward. So there you have it, folks. Some great tips from Denise. And if your credit is not perfect, and very few people have perfect credit, there's always something on there. Little things that you can do to make sure that when the time comes and you go in to see your mortgage broker or your lender at the bank, that they're going to be smiling at you rather than frowning, that they'll see that your credit is the best that it can be. So thank you again, Denise. It's always great to have you on board the podcast and the video. And I wish you all the best. Have a great day.
Thank you. You too, Randy. Thanks for having me.
Take
care.
Okay. See you again soon. Bye now.